Hello and welcome to my channel. In today's video, I'll be talking about some interesting facts about the global payments industry and what does the future of the global payments industry look like. This video is based on a research report by McKinsey, the link to which I have shared in the description below. So, in this video, I'll be covering four important aspects. The first is the impact of pandemic to the global payment ecosystem and how has it changed the global payment ecosystem. Secondly, I'll be touching upon some numbers, which includes understanding the size of the industry, the distribution, and its growth. Thereafter, I'll talk about some of the major trends observed over the last decade and how those trends are affecting the payment ecosystem. And finally, I'll be talking about what are the future drivers of the payment industry and what would the future look like based on those drivers. In 2020, the COVID-19 pandemic had a major disruption on the global payment industry. One of the key impacts of the pandemic on the payment industry was the drop in the cash usage. In 2020, the global cash usage declined by almost 16%. And this decline in the usage of cash caused an increase in the unit servicing cost of the ATM, thus resulting in an increase in the cash withdrawal fees in many countries across the globe. And certain countries such as Argentina, Poland, and Thailand have already increased their cash withdrawal fees. Also, countries in Europe are downsizing their ATM network. And this has also caused a shift in the governmental behavior. So the governments across the globe are looking for moving from physical currencies to a central bank digital currencies. And China is leading on that front. The second major trend that was a result of pandemic was the increase in e-commerce, which means the pandemic has forced the consumers to move from doing their commercial activity in physical stores to online stores. And this resulted in the mass adoption of digital wallets. The pandemic, in a positive way for the global payments industry, has forced the utilization and the growth of the pre-existing payments digital infrastructure. Asia Pacific, specifically India, China, and South Korea, saw the highest increase in the adoption of the digital payment mechanisms. The positives of digital payment in combination with the forced adoption of the digital technology due to pandemic has resulted in an increased usage of the digital payment technology across the globe. Thus, the pandemic has resulted in a tailwind for the payments industry in terms of reduction of the cash usage, increase of e-commerce transactions, and adoption of the digital payment technology. Now let us dive into some numbers. From 2011 to 2020, the global payments revenue saw an increase of about 7% per annum. However, in 2020, the payment revenues dropped by about 5%. This drop was the result of the decreased commercial transaction around the globe due to the COVID-19. However, it is expected that by 2021, the overall payments revenue will revert back to its 2019 levels of $2 trillion, and thereafter it will see a 7% annual increment over the next 5 years, reaching about $2.6 trillion by 2025. Now let us break down this distribution of the global payments revenue by geography and the types of revenue and understand. Looking at the distribution of the payments revenue for 2020, we observed that APAC was the largest contributor to the global payments revenue, followed by North America, Europe, Middle East and Africa, and finally Latin America. And breaking it down by the commercial versus consumer transactions, we observed that in APAC, the commercial transactions contributed largest share of the revenue, whereas in North America, the consumer transaction contributed to the largest percentage of the overall revenue. And one of the key things that we observed is in APAC, the credit cards, the revenue generated from credit cards was a smaller percentage of the total revenue. Whereas in North America, the revenues from credit card form a larger share of the total revenue. In 2020, the drop in global payments revenue was by about 5%. And Asia Pacific, which is the largest share of the global payments revenue, saw a drop of about 6% in the total revenue. And Latin America saw the highest drop of about 8%, in the payments revenue. However, the contribution of Latin America to the total global payments revenue is relatively smaller. North America saw a drop in the global payments revenue of about 5%, and Europe, Middle East, and Africa saw a drop in the global payments revenue of about 3% in 2020. However, going forward, it is expected that we would observe a 7% annual growth in the global payments revenue, and APAC region would observe about 9% of the revenue growth. Latin America will observe the highest growth at 11%. North America would observe the growth at 6%, and Europe, Middle East, and Africa would observe a growth rate of about 4% per annum. Thus, even though we observe a one-time negative effect of pandemic on the global payments revenue, we have a healthy and optimistic future to look forward. Now, let us look at some important trends that we observe. The COVID-19 pandemic has resulted in tools and restrictions on global travels. That resulted in reduced global travel, global trade. This resulted in the reduced cross-border payment revenues in 2020. However, it is expected that by 2021, the cross-border revenues will revert back to its historic growth rate of about 6% over the course of next 5 years. Thus, a drop in the revenue due to reduced cross-border payments was in part offset by the increased usage and adoption of the digital payment technology. And it is expected that about 2/3 of the drop in the cash usage is here to stay even after all the social distancing and the global travel restriction norms are lifted up. So, that's a positive news for the global payments industry. Now, I will talk about one interesting trend that was observed over the last decade. From 2010 to 2020, the share of net interest income in the payments revenue dropped from 51% to 46%. A lot of banks and the payment companies are looking for new sources of revenues which are more based on the fees. And also, the banks have started to charge negative interest rate in order to cover for the drop in the interest margin. This is an interesting trend in terms of the drop in the interest rate around the globe, which forces the banks and all other finance companies to look for new sources of revenue, such as fee-based revenues and negative interest rate. Now let us look at the life cycle of the digital payments adoption and what are the key drivers. A digital payment can be categorized into 3 types. The first is peer-to-peer transaction, the second is consumer-to-business transaction, and the third is business-to-business transaction. The peer-to-peer has the largest share of the digital payment. Consumer-to-business is the second largest share of the payments revenue, and business-to-business is the third largest share of the digital payment revenue. And the pandemic resulted in an increase in P2P and C2B transactions. Now let us look at the key drivers that will drive the future of the global payments industry. In addition to being fast and easy, digital payments offer two more value propositions that will force the governments and businesses to more and more adopt digital payment technology. First is digital payments being a cheap mechanism for transferring money, as it reduces the cost of managing cash, would force the governments and businesses to incentivize the usage of digital payment technology. And finally, digital payments introduce transparency in the ecosystem. So, the tracking of money movements for illegal activities becomes a lot more easier and makes it a lot more harder for the people to do illegal activities. However, it can act as a double-edged sword where, at the cost of transparency, privacy can also be suppressed. So overall, the digital payments offer strong value proposition for the government, businesses, and individuals. Thus, the future of the digital payment industry is highly optimistic, and the COVID-19 pandemic has further accelerated the adoption and usage of digital payment methods and would add to the revenues